Hello my dears, here we are explaining section 130. Section 130 state that can we reopen our already prepared books of accounts or can we recast the financial statement that we prepared? As per these arrow marks you understand that no, that is it is stating that no to reopen or no recast. But at the same time, reopening or recast, that is reopening of the books of accounts, recasting the financial statement is allowed, subject to the following. First of all, an application has to be filed. Application have to be filed with the tribunal. By whom this application have to be filed? Application can be either filed by the central government, income tax authority, SEBI, or any other concerned person or any other regulatory body. So these are the category of people who can file an application with the tribunal for the purpose of reopening of the books of accounts or recasting the financial statement. So why they are filing such an application? They think that or they have a reasons to believe that relevant accounts, that is relevant accounts of the company for that period were prepared fraudulently. That is fraudulently they were prepared the books of accounts or financial statement. Okay, they have a reasons to believe that or they got anything and they are believing that the accounts, relevant accounts were prepared fraudulently or relevant books of accounts were prepared fraudulently by the company, or they have a reasons to believe that this is the time period. This is the time period. So in this period, Vijay Mallya was the CEO of that company. It means that they believe that affairs of the company were mismanaged during that period. They believe that because of the Vijay Mallya, affairs of the company were mismanaged, and this is also casting significant doubt on the reliability of the financial statements. Okay. So this is also casting what, or this is also causing a doubt on the reliability of the financial statement. So these are the cases where they can file an application to the tribunal. Tribunal on receipt of an application, if they also thinks that they will pass an order to the effect. What will be the effect? The tribunal or the competent court shall pass an order to the effect that relevant accounts were prepared fraudulently or affairs of the company were mismanaged during that period, that is casting significant doubt on the reliability of the books of accounts and financial statement. Only in that case a company shall reopen the books of accounts and recast what? The financial statement. So in legal terms we can say that no company shall reopen the books of accounts or recast the financial statements unless an application has been filed to the effect unless an application has been filed by the central government, income tax authority, SEBI, or any other person concerned or other regulatory body, and an order to the effect has been passed by the competent court or court of competence or tribunal to the effect that relevant accounts were prepared fraudulently or affairs of the company were mismanaged during that period, that is casting a significant doubt on the reliability of the financial statement. So only if these cases are existing they can reopen or recast the financial statement. If there is not exist any such cases, then they shall not reopen the books of accounts, recast the financial statement. So any books of accounts or financial statement which has been recast or reopened, then the recast financial statement or reopened books of accounts, that will be what? Final. The old will not be valid, or only the reopened or recasted financial statement shall be what? Final. Okay. It means that such revised books of accounts or revised financial statement will be valid, or it will be what? Final. Prior period books of accounts, if it means it is stating that if our books of accounts were subject to reopening or financial statement were subject to recast, then the revised books of accounts and revised financial statement shall be final. We don't want to check the older one because we have made what? Some modifications to it because of the section 130. I hope you understand what section 130. Section 131, voluntary revision of financial statements and board report. It is stating that whether we can make such a revision of these financial statements and board report. The answer is if any director of the company, suppose company ABC Limited, this is the director D of company ABC Limited. He is thinking that the financial statements of the company is not complying with the section 129 of the Companies Act 2013, or board report is not complying with section 134 of the Companies Act 2030. If he thinks so, in that case he can inform the company with respect of the same. Company can file an application. Company can what? File application. With whom? The tribunal. Tribunal, after receipt of the application, if they also satisfied that, then they give the approval. If the company has obtained the approval and before passing such an approval order, the tribunal shall send notice to the income tax authority, SEBI and other regulatory body for the purpose of considering their objections and their suggestions. Okay, so if such an approval has been obtained to the company from the tribunal for voluntary revision of the financial statements and board report, in that case they may revise the financial statements and board report. Then the next question, can a company revise financial statements and board report of preceding 5 years, preceding 4 years, preceding 10 years? So the answer is that they can make such a revision of this financial statements and board report only any of the 3 preceding financial year. Only 3 preceding financial years financial statements and board report can be revised. Not of 4 years, 5 years, only 3 years. It can be any of the 3 preceding financial years financial statement that can be revised, or financial statements on board report that can be revised by the board of directors of the company. Such a revision means they can make some changes or alteration for the purpose of, or to ensure that it is complying with section 129 of the Companies Act and 134 of the Companies Act. So only consequential amendments are allowed, or consequential changes are allowed, or alteration and some corrections for the purpose of ensuring its compliance with section 129 and 134. How many times? Only one time. So revision of financial statement, as per the legal language, if any director of the company comes to the knowledge that the financial statements of the company or report of the board of directors is not compliance with section 129 and 134 of the Companies Act 2013, they shall file an application, or they may revise the financial statement, or they may prepare revised financial statements and revised board report. On an application to the same has been filed by the company with the tribunal and an approval order has been obtained by the tribunal. Copy of order has to be filed with the registrar. Such a revision can be made with respect of any 3 preceding financial year. Okay, so this is what section 139, voluntary revision of financial statements and board report. So here we are discussing section 134, that is the financial statement approval. Who shall approve the financial statement? Before making a signature on the financial statement, board of directors of the company shall approve the financial statement. Board of directors shall approve financial statement. Then who shall be the person to sign on the financial statement? First of all, chairperson. If authorized by the board of directors, chairperson shall sign the financial statement. If they are not authorized, they can't. Then 2 directors, one shall be the managing director. Okay, so chairperson if authorized, then 2 directors, one shall be the managing director. Some companies may appoint chief executive officer, chief financial officers, company secretary. So if the company, that is it can be ABC Limited, if ABC Limited have any of these posts, then it has to be approved by the CEO, CFO, CS. That is if any. It means if the company appointed this post or this person to the post of or to the office of CEO, CFO, CS, these person have to be signed on the financial statement. So approval shall be by the board of directors, signature shall be done by the chairperson if authorized by the board of directors, then 2 directors, one shall be the managing director, then CEO, CFO, CS if appointed by the company. Then we already know with respect of the board report, section 134 is providing with respect of the board report. Board report contains what? Director's responsibility statement. Director's responsibility statement means nothing. It is a statement which has been prepared by the board of directors to provide information with respect of the following matters. First one is that financial statement is prepared as per accounting standard. That is, while preparing the financial statements, we have followed accounting standard. Then, while preparing the financial statements and while maintaining the books of accounts, we have followed accounting policy and we have consistently followed the accounting policies. We have prepared the financial statement on the basis of going concern assumption. Going concern means business will be continue for a foreseeable future. This is what going concern assumption. So they are telling that financial statements are prepared as per the going concern assumption. There is appropriate measures to safeguard the asset of the company. That is, internal control system of the company is functioning efficiently and effectively. Then we are following applicable laws and regulation. That is, our financial statements are prepared or our business is conducting or carrying as per by ensuring compliance with the laws and regulation. Then our internal financial control system is operating efficiently and effectively. Internal financial control system is not applicable to one person company, small company, dormant company, private company having a turnover less than 50 crore, loans and borrowings which is less than 25 crore. So these are what content of director's responsibility statement. It is nothing but a statement which has been prepared by the board of directors to state the following. That is, the financial statements are prepared as per the accounting standard according to section 133 as per accounting policy. That is consistent application or consistent follow-up of these accounting policies. Financial statements are prepared as per the going concern assumption. They have appropriate measures to safeguard the asset of the company. We are following the laws and regulations, or we are complying with the laws and regulations, and internal financial control system of the company is operating efficiently and effectively. Okay, I know that section 134 section 135 is remaining. This is about corporate social responsibility. I have to complete this financial statement related section. We have continuously 128, 129, 130, 131, 134, 135 is CSR. I am here taking 136, which is about what? Circulation of the financial statement. I will take 135, don't worry, but I have to complete this video with respect of the financial statement, and I will issue a separate, or I will record a separate video for 135. If you mix all these sections, so you will miss what is with respect of financial statement. So first of all, we have to complete what all the matters with respect of the financial statement. Okay, so here I am taking about section 136, which is requiring that circulation of financial statement. So financial statement have to be circulated to Malti. Malti is the mnemonic that I have used here. Malti. That is, financial statement include financial statement along with the consolidated financial statement, audit report and other documents. These has to be circulated to Malti. M means members. A means auditors. Auditors. Next, A, official assignee. If members become insolvent, then it has to be sent to the official assignee. Here the A comes. Okay. Then L, legal representatives. That is, if the member become, if they are died, then it has to be sent to the legal representative of the deceased member. Then last one, T, trustees of debenture holder. So financial statement along with the consolidated financial statement, audit report and other necessary documents has to be circulated to every members, auditors of the company, official assignee, legal representative of the deceased members, then trustee of the debenture holders. So every company is required to comply with this 136. That is, it is required to make the circulation within a period of 21 days before general meeting. That is, this is the date in which we have to conduct the general meeting. It has to be circulated within a period of 21 days before general meeting. But if it is a section 8 company, such a circulation has to be done 14 days before the general meeting. Normal company 21 days before the general meeting. Section 8 company 14 days before the general meeting. So it has been stated that section 136 of the Companies Act 2013 provides for circulation of financial statement, comma, financial statement including consolidated financial statement, audit report and other documents has to be circulated to every members, auditors, the official assignee in case legal representative of the deceased members and trustees of the debenture holders of the company, provided that every company shall circulate such statements or such records within a period of 21 days before the general meeting. But if it is a section 8 company, it has to be circulated within a period of 14 days before the general meeting. Section 8 company 14 days, normal company 21 days. Have to be filed, or this has to be circulated to Malti. I is silent here. Okay, I is what? Silent here. So the next question come, now we already provided that books of accounts of the company can be maintained in electronically. So the next question comes, can we circulate these documents electronically? I have the answer, or the Companies Act have the answer. Electronic circulation shall be possible. Company, that is listed company and such class or other classes of company, make the electronic circulation of financial statements, CFS, AR and other documents to the members, auditors, official assignee, etc. So other classes of company, which are these other classes of companies? So electronic circulation, this is not mandatory, they may, only they may. Okay, so every listed company, other class means only public companies are included. Public company having a net worth of more than 1 crore, and turnover more than 10 crore, that is the mutually net worth have to be more than 1 crore and turnover have to be more than 10 crore, then they can make the electronic circulation. Suppose if the securities are held in demat form, such a circulation can be made to their email address. If the concerned shareholders, that is if any of this category of person requested such company or such listed company or classes of company to make the electronic circulation, then they can also send electronically, that is through their email. These documents can be circulated. But if there is also have some members or these kinds of person who may not provided with respect of, or who doesn't require the company to make the electronic circulation, in that case they can make the physically, or they can physically circulate these documents to such members or such any of the category of people. So electronic circulation is not mandatory. This is what an option available to the listed company and other classes of company, which is a public company having a turnover more than 10 crore and net worth more than what? 1 crore. It has to be a public company. Okay, so this is what section 136. I hope you have got the answer. So can a member access the books of accounts? No, only a director can access the books of accounts. Can a member access the financial statement, CFS and audit report? Yes, they allowed. Okay, so this is what section 136. Now we are moving towards 137, and thereafter I will separately record section 135. You don't worry with respect of the same. Okay. Hello my dears, here I am taking section 137 file. This is the filing section, that is the documents such as financial statements, consolidated financial statements, audit report have to be filed with the registrar of company. Suppose annual general meeting has been held, AGM held, and same financial statements, audit report and consolidated financial statement has been approved in the annual general meeting. If the same has been approved within a period of 30 days of AGM, that is AGM has been held in this day, and all the necessary documents or the financial statement, CFS, audit report has been approved in that general meeting, that is annual general meeting, within a period of 30 days, same has to be filed with the ROC along with the prescribed fee. Suppose if the company fails to make such a filing, that is fails to file financial statement, CFS, AR with the ROC within these 30 days, they have to make the payment of additional fees as may be prescribed. Okay, then AGM has held, but in that AGM the financial statements were not adopted. So in that case, that is AGM held but financial statements or CFS is not adopted. In that case, this is the AGM date. Within a period of 30 days, the same has to be filed with the ROC. Within a period of 30 days, the same has to be filed with the ROC in form AOC 4. That is provisionally, they have to file the same, and the AGM will be adjourned for the purpose of approval or to adopt the financial statements, etc. So in that adjourned AGM, the financial statements were approved. So in that case, within a period of 30 days from the date of this adjourned annual general meeting, they have to file what? the approved financial statements, audit report, CFS with the ROC in AOC 4. Okay. The next case, annual general meeting, that is company fails to held what? Annual general meeting, that is company has not held annual general meeting. In that case, suppose this was the last date to conduct AGM within a period of 30 days from the day in which the company required to held AGM. Within a period of 30 days from this day, they have to file what? The facts or reasons because of which the AGM was not held, and what? Financial statement, consolidated financial statements, audit report with the ROC in AOC 4. In AOC 4. So the form number to file all these statements with the ROC is what? AOC 4. If they are making this, or they are filing all these documents within the time period, they have to make the payment of the prescribed fee. But if they are not making, or they are not filing these statements within that 30 days period, they have to make the payment of additional fee. So here we discussed annual general meeting held, adopted the financial statement, they have to file within a period of 30 days from the AGM, from the date of AGM to the ROC. If they not filed, they have to make the payment of additional fee. Then AGM held but not adopted, they have to file the financial statements which were not adopted in the AGM with the ROC in AOC 4 within a period of 30 days. And in adjourned AGM, if it is adopted, the same has to be filed with the ROC. Then the third case, AGM was not held. In that case, the company is required to file within a period of 30 days from the date in which company is required to held AGM. What are the factors, or what are the matters that is to be filed by the company? The reasons because of which the AGM not held, that is reason, facts or reason because of which the AGM not held, and they have to file what? The financial statements including CFS and audit report within a period of 30 days in AOC 4. If they file within a period of 30 days, they have to make the payment of the prescribed fee. But if they failed to file within that 30-day period, they have to make what? Additional fee. This is what? Section 137. And they have one more, section 138. After completion of 138, I will move towards 135. Okay. So section 138, that is internal audit. Internal audit is compulsorily required to be held by the following classes of company. If it is a listed company, no matter without or irrespective of the paid up share capital, loans, deposit, borrowings, or what the turnover, they have to conduct the internal audit, and they have to make the appointment of an internal auditor. Suppose unlisted public company, is it required to apply, or is it required to make the internal audit in case with respect of all unlisted public company? Not required. That is, they have some categories of unlisted company that is required to compulsorily what? Compulsorily held internal audit. Which are that categories of unlisted public company? So such classes of unlisted public company can be identified by analyzing what? The following criteria. Here I have provided the criteria. If the turnover of the company is equal to more than 200 crore, equal to or more than, that is not less than 200 crore, having a turnover not less than, video problem. So having a turnover of not less than 200 crore, that is 200 crore or more. Then deposit not less than 25 crore. It means 25. If an unlisted public company having a deposit of 25 crore or more, then they have to appoint what? Internal auditor. Loans and borrowings from the bank and public financial institution. Loans and borrowings only from the bank and public financial institution more than 100 crore. Check this. More than. Okay. What? More than. With respect of loan, it is not equal to, only exceeds 100 crore. Not less than. It is not less than. If an unlisted company having loans and borrowings from the bank or public financial institution which is more than 100 crore, they have to make the appointment of internal auditor. Paid up share capital not less than 50 crore. So only you have to focus what? This point, which is stating that loans and borrowings more than 100 crore. Paid up share capital what? Not less than 50 crore. In these cases, if any of the case exists, such unlisted public company shall appoint, or that is not shall, mandatorily appoint internal auditor, and it is required to conduct what? Internal audit. Then private company. Question comes. Is it required to apply section 138 to a private company? Yes, subject to some condition. The same condition, same criteria, but only 2 criteria. Only turnover and loans and borrowings are considered with respect of a private company. If a private company having a turnover, same turnover, having a turnover of not less than 200 crore, it means 200 crore or more, and loans and borrowings same 100 crore. Loans and borrowings more than, here also more than, not equal to, more than 100 crore, then that private company is also required to make the appointment of internal auditor. So internal audit, section 138 of the Companies Act 2013 is applicable to all listed company and such other class or other classes of company. Other class or other classes include unlisted public company and private company. Unlisted public company having what? Deposit of not less than 25 crore, paid up share capital not less than 50 crore, loans and borrowings from the bank or public financial institution exceeding 100 crore, turnover not less than 200 crore. Private company having turnover not less than 200 crore, loans and borrowings from the bank and public financial institution exceeding 100 crore. So in these cases they have to apply or they have to make the appointment of internal auditor and have to conduct internal audit. Now we are moving towards section 135. I will separately record section 135. Here we completed all the relevant section with respect of the books of accounts and financial statement. That is section 128. We have completed maintenance of books of accounts. 129 financial statement. 130 reopening of financial statements. 131 revision of financial statements and board report. 132 note here. 133 accounting standard, that is, it is stated that central government may prescribe the accounting standard in consultation with ICAI. I think there will be some major amendments in section 133. 134 what? Approval of financial statement. 135 we are going to undertake this section because it is what? CSR. 136 circulation of financial statement. 137 filing with the ROC, which that is financial statements, CFS and audit report, which is this has to be filed with the ROC. 138 internal audit. These sections that we have completed now. Okay, so study well. We are moving towards section 135. Before 135 you have to read all these sections one time. All the best, dears.